Market observations for Mt.Gambier in South Australia. So this is an area that has been covered very widely in property investment circles in 2022, and if not slightly before. We recently run a poll, a survey on our high performance property investment group on Facebook. It's a private Facebook group. If you wanted to jump over there and apply to enter, a lot of really engaging property investment conversations, first look research. This was the number one in our survey of the last week of people interested in learning more about investing in Mt.Gambier. So in this video, we're going to be starting with a high-level overview of the opportunity, digging into the individual suburbs and streets that are potentially worthy of our investment. So let's begin our analysis. Obviously, I always include this slide. Property investment is a science. There's no real room to act on emotion. We want to be acting like professional, sophisticated investors. We need to then break the mold. We need to go above and beyond, right? We can't rest on our laurels, rely on public advisory research. We need to get this right, and we need to remove all emotion from the equation. Science gives us some hints here. Now, I'm going to be jumping over into picky.com.au to help us with some of this larger macro analysis. But we can see here retail trade is the largest employment industry. It is relatively diverse, but I like to see healthcare and social assistance as a large employer in any area. And here it is, education, training, manufacturing. These are all, the backbone of our more successful economies in Australia, and they are all current here in Mt.Gambier. I'll dive into the overall diversity of this in a moment. Let's have a look at this unemployment chart before we do. I want to gauge the employment health of the market. Unemployment here is on the upwards trend in 2021, heading up towards 7 or 8% unemployment. It is high nationally. Remember, Mt.Gambier, for those that don't know, is the second largest city in South Australia. So you might think, wow, that's a big centre. Well, it's not. It's around 30,000 people. That's not a big city. South Australia, it doesn't have a depth of population. It's a very centred, focal population on Adelaide, and then it drops off very quickly. The population centres outside of Adelaide are generally tourism-based. Mt.Gambier is the exception there. Obviously, we did see nice diversity of employment, but it's not a large centre. It's very fickle. It is reliant on industry, on mining, and on servicing surrounding locations and areas. And for that reason, we have to be very careful. Very careful. So when we start seeing trend lines like unemployment coming up here towards 7, 8%, we have to start going, look, is Mt.Gambier a lower risk proposition than a similar size area that's attaching itself to a bigger capital? Remember, a million people capital like Adelaide is not huge, right? A regional centre attaching itself to a small capital is not really anything to write home about. It's a big difference between a Mt.Gambier and a Toowoomba, or even a Rockhampton further north, or a Wollongong or Newcastle or Geelong or Bendigo, Ballarat. Or even these Joondalups or Manduras, etc., Rockingham in Perth. They are very different conversations that we're having. The second biggest city in South Australia is not something to write home about here in terms of size, and then also, I guess, volatility. It causes risks. And so we are seeing this trending in the wrong direction. We don't want to be on the wrong side of a 10-year plateau in a small regional centre surrounded by very fickle drivers of demand. So that's just a flag. I'm not saying if that's the case or not. We haven't got deeper into this analysis. It is just a risk. I don't want to be left, with a basket case that's very slow to improve. Population growth, it is low and decreasing. Another hint. We might have an entry window at the moment into this market, but is a long-term attractor of our attention. So let's dive into the market opportunity. I might go over into Picky to help us with this conversation. I'm going to be going into the local government area of Mt.Gambier to begin this analysis. Okay, 26,000 people, give or take a few thousand. Employment is average diversity. Right, with a regional centre, I get very fussy here. I do expect there to be very high diversity in my employment. When you're talking about an area of around 30,000 people, I expect it to be very diverse. We have, all the red flags. It might be an investor who's only been investing for 3 or 5 years. They might be new to this game, talking about these areas coming and going, where they haven't been burnt by holding an investment property in an area without growth for 10 years in their portfolio. Right? An area of this size, we have to ensure the fundamentals are there. Diverse employment, good, strong income growth. This area is only average. Commute time, ignore it in this scenario because this is pinning it to Adelaide. It's actually determined that a lot of people in Mt.Gambier, a reasonable number of this population, work in Adelaide, and it's pinning the commute time to the capital city. Obviously, it's not appropriate in this situation, but we have to take this employment landscape with a grain of salt. This overall area on a national level, when you look at this fundamental macro, longer term approach, is very poor. It's in the bottom 40% of all areas across the country. That employment, it's not good enough for me. I need that diversity. I need to have unemployment trending downwards. Recently had a conversation or a question from an investor talking about unemployment trends. And we have to think about the relationship between population growth and employment. You could have an area of low population growth with no new homes being built. The reason why there is no low population growth is because there's no new homes for people to move into. But when they find a place to rent, there's all these jobs there ready and waiting for them. So sometimes you can have low population growth and low unemployment. Sometimes you can have low population growth, like we have in this area at the moment, with high unemployment. That means not many people are moving there, and the ones that do don't really have many jobs to go to, or they have, not very diverse jobs and very focal, seasonal or industry-focused employment. Or you could have high population growth areas with not many jobs to go to, so you have high population growth and low unemployment. You have to look at the combinations of these things. Mt.Gambier has low population growth and a pretty unhealthy employment landscape when you consider the whole country. For me, this is a big red flag with these isolated population centres. Once you get here, though, it is serviced by the big ticket items. You do have your hospitals, the localised factors drawing into Mt.Gambier, good broad mix of schools, and you've got your Bunnings. So overall, it is relatively well serviced. I might skip through into the population growth here, guys. Generally, population growth for the next 3 years is actually looking a lot better than it has for the last 10. All right, and there is low new home construction here. So we generally have a 1% under supply, right? So that's actually a positive when we're looking at this market. But there is still some new home construction. We need to be very careful of this. We've got Mt.Gambier proper. I'll zoom in a little bit here. Mt.Gambier is predominantly one large suburb surrounded by 2 peripheries. Okay, so Mt.Gambier proper, only 2% new homes in construction. That's around about what the population growth forecasts are for the next 12 months. But you are surrounded by 2 areas with a lot of supply. We need to dig deeper into that, right? So you've got places in the country like Wagga Wagga where in and around the CBD, low new construction, it's very established in terms of the era of properties. And then you have the Lake Albert area. It's on the periphery. A lot of new homes are being built through, that paddocks and farmland around that side of the city. That is the higher price point. All right, so sometimes you would think all these new homes being constructed around the outside of these cities, well, it means positive things for the internals. We have to be careful to make sure that it's not creating a second tier of properties, higher class properties. It's drawing value out into the suburbs. I'm not saying it's the case here, but with this size of a city, we do need to be careful of it. Wagga Wagga is another example where we've had to do this type of onion ring analysis. Okay, so just overall, I have to say the opportunity in Mt.Gambier on a national level is not really punching above its weight. It's not justifying itself to draw into me. I've seen other areas like this over the years that have really good buying dynamics now, and then, they might give you 6 months or 12 months worth of reasonable growth and then nothing for very long periods of time. We have to be careful of this for this type of area. Let's dive into so we've talked about the overall opportunity. Let's see the buying window. Is it the right time, if we had a gun to our head, to buy a property here in Mt.Gambier? Days on market, very tight. Sorry, this has been very annoying. I'm sorry. Let me fly through this. Days on market. Days on market very tight, has been for the full year, under 20, 30 days on market. Extremely buoyant sales activity. We had a period of very high competition in March. Let's have a look what happened to property prices soon after that. We do have another period of very high competition here in September also. Okay, so something's going on there as of right now. Stock inventory is drying up. So the demand is sucking out the supply, and it's not been fulfilled, right? So this high competition here in March resulted in a downward trend of our stock inventory. We didn't have much competition here in April. It pops back up again in May. So that's sort of showing to us that in the times when there is not much purchasing competition, the stock is still coming into the market. Okay, we still have the turnover there, and we've just cleared through, as another example here in September, a lot of competition, a lot of 1 week or less sales. It has cleared through very cleanly the stock inventory on the market. Potentially, if that high competition doesn't go into October, which is when we're filming this could pop back up again, which is what I would expect. Days of supply trending downwards. Okay, I want to look at the red line here, which is houses. This is showing that things potentially are constricting up. The pressure is building with days of supply reducing like that. Asking prices, we have had a very strong period of upwards momentum in property prices starting back in late 2021. It has dropped off a little bit. It has plateaued. Remember, March was the period of really high competition, and that high competition sucked the supply out of the market and pushed it up to here. Well, guess what? It's pulled back a little bit. Let's see, we've had an area of plateau, and in September we've had high competition. Is that a sign that the market potentially has got another run in it? Has it? Is this an area where we want to be chasing these 3 to 6 month cycles and then potentially not much else? That's the question. So let's dig into that a little bit deeper. Sold prices, so this is vendor discounting. Blue line here is houses. It is quite sturdy. This is demonstrating to us there is still quite a bit of heat in this market. This means that property prices are selling for around 4% over asking prices, and it is quite steady. Okay, wouldn't really look at the red line here because that's all other types of properties. Generally not many units or vacant lots selling in this type of area. So blue line here is steady around that 4% vacant vendor discounting. It's showing to me that there is still a lot of heat here in this market, and that's been steady for the last 12 months. Maybe the optimum buying window was 12 months ago, maybe arguably 6 months ago. Maybe it might be running out of steam right now. Recent indications are that the sold price is just coming backwards a little bit. Remember, if the asking price is lower, the vendor discounting rate is stable, then it's pushed over into lower sold prices. So just as of now, sold prices have pulled back off the dial a little bit. That is one of the key factors that we actually look for, is that short-term correction for another leg up, another growth cycle. But I'd like to see stronger underlying macro where factors. The overall opportunity here is not justifying my attention. It's as simple as that. Rental days on market, stable, extremely tight rental market. Vacancy rates have just started popping upwards towards 2%. At a national level, guys, when it's starting to head up towards 2% there, that is above average. That is high vacancy rates now at a national level. Over the last 12 months, it has been at around that 1%, which is national vacancy rates. But the trend line is in the wrong direction. The rental market might be losing steam. So this now slowdown phase in the sold price and the asking price, vendor discounting is stable. That might not be an indication of consolidation for a leg up. It might be an indication of the market exhausting itself, especially if you start seeing vacancy rates moving upwards. Rental property, rental prices, the reason why vacancy rates is increasing is not because rental prices keep going through the roof. They have stabilised. Okay, they have stabilised. You've had very strong rental price growth up here towards 390, 385, 390 a week. Now they've held out and haven't gone past 400. They've stopped. So you've had stable rental price growth for the last 6 or so months and vacancy rates increasing. This is not really showing signs of health here. All right, let's keep going through. I think that's it here, guys, for the slides. Overall, let's dive into the individual suburbs, but we don't have an amazing opportunity. Potentially 6 or 9 or 12 months was our buying window here. I don't have the comfort or the confidence of a second leg up here just at the moment. Now, with these, small to medium, small size regional centres, you generally have the city proper and not many other suburbs around it. I think of another example down here of Devonport in Tasmania, around the same size as Mt.Gambier. You really only have Devonport itself, and then East Devonport. There's only usually 2, 3, 4 suburbs in this size of a city. So we don't have a huge amount of choice. Remember, the other suburbs had a lot of supply coming into them, so I'll be probably staying away from those. Mt.Gambier itself, at a short-term cycle, remember, I'm not arguing with this algorithm. This was my assessment over here on the slides. And I did say that there was some reasonable momentum coming into this market, but it is probably looking like it's coming towards a top. And I don't have the confidence that this is a short-term consolidation because of the health of the rental market. Well, when the algorithm looks at it, it is still saying that it's in the buying window. I wouldn't dispute that. But I have gone a little bit deeper into it to say, even though the algorithm is saying that it's still got some run left in it, I don't have the confidence it's going to be sustained, and potentially it could be a false flag. Okay, I'm a little bit concerned about that. We need to dig a little bit deeper, and sometimes we need to go deeper than the data. For me, I just want to have a look around here. There's not really much at the suburb versus suburb view that's going to show us anything different here because there are only 3 suburbs. Maybe we might move down here into the street level analysis for Mt.Gambier. This is where it gets really interesting with these larger suburbs. Because it is such a large suburb with potentially 20,000 people living in it, the individual street pockets become essentially mini suburbs, right? So you've got to get this right. And so this is where we can see some really interesting things. You can see across the city you have the owner-occupier enclaves over here. So this is where most of the owner-occupiers are preferring to live. And then you have a ring of investors through here. And then some owner-occupiers up here to the north, and then the south, southwest over here. So this is investment heartland, this is an owner-occupier pocket, and potentially this south area are owner-occupier pockets. Remember, we like to see over 2/3 owner-occupiers at a street level and at a suburb level generally if we can't get the street level right. So that's basically ruling out this middle market through here. This is probably the exception, not the rule, so I might rule that out as well. This might be a pocket worthy of our attention, but we have some risk factors either side of it. This is really where I like to focus my attention when you have areas surrounded by other areas that are doing the same thing. And then this whole pocket here is potentially worthy of our attention. Okay, next area is property type. We want to find areas with lots of houses. We definitely don't want to consider units unless you're buying the whole unit block in these small regional centres. So once again, we have a lot of owner-occupiers with strong demand for houses. This is a good fit. So the most common in-demand property type has a good fit for owner-occupiers which are looking to improve and increase property prices, once again down here as well. So we've got lots of the in-demand property type in the streets that we're looking for. Overall, sold prices is good for us to know what to pay for a property. It doesn't really come into this street level analysis too much. Rental prices, I like to target areas that are above average in rent. So not this south area. Whilst it has lots of good, strong owner-occupier appeal, the rents that are achieved at that street level are not keeping pace with it. All right? But this is a really powerful combination, owner-occupier appeal and above average rents. If we can team that with above average yields, it means there is an extreme amount of demand in that area. So generally you see higher yields in lower socio pockets. All right, across the suburb, rents, hold up at a higher amount as the property prices detract. That's generally what we see. So generally we see higher yields in lower priced pockets. Here I would love to have seen the higher yields in this street pocket as well. Not really a trend here. We've got definitely higher rents, but we have higher prices. The yields are average or slightly below average here. I would be focusing my attention on these, this particularly 5.4, 5.2, 5.2, 6.7, even up into the 5. These are my street pockets where I might have that. There's still that underlying owner-occupier demand, the market dynamics that I'm looking for, but yields that are acceptable. Now, public housing, I'm actually going to be interested to see where the public housing is here. Big no-go zones. Big no-go zones. Up here in the north, big no-go zones. This area through here, big no-go zones. 25% public housing. You've got to think, where do these people commute or walk to, the key drivers of utility in the CBDs? So this pocket might be all right because it's further away. This pocket might be okay. You have to see where these people walk or how they, associate around the area. You have to put this lens onto how we invest in these local areas. So for me, this really rudimentary analysis, I haven't joined these together properly, doing this on the fly. I would be focusing my attention in and around these areas, but very sensitive of this public housing pocket. How do these people commute? Where are the shopping centres? Where are the CBDs? Where are the areas that these guys are, travelling to for employment and for food? Because if they're not working, they're sitting around all day. What are they doing? Are they walking around these streets trying to see cars or things that are out there and about for them to take advantage of? I've seen it. I've owned properties in and around these areas and they haven't performed, right? So I'll be very open and upfront about this. This type of information is useful for us as investors. Obviously, public housing does a great social good, but we have to be sensitive of it about where we put our houses and our investments. So overall, I think we can definitely do a lot better than Mt.Gambier on a national level. Look to Northern Queensland. If you want the yield, Northern Queensland. If you want the growth profiles, go to potentially South Australia, other parts of South Australia, WA, regional New South Wales, regional Victoria. Okay, there's much better opportunities out there across the country than potentially Mt.Gambier right as of today.